All right. Welcome to the Ultra High Net Worth Clients Podcast. I'm your host, Chris Broadhead. We started this podcast as a way to create a central resource of the best financial advisor practice growing tips shared by the most outstanding advisors in the industry, of which our guest today is definitely one. These outstanding financial advisors agree to be on the show and provide a ton of value for free, all in the hopes that our audience might learn from their words. My father was an advisor, and advisors are the main client we serve. So, my marketing agency's mission is to help every advisor grow their business in an effort to help the world become more financially secure. Today, we have the rare pleasure of talking with an incredible financial advisor, Cory Sims. Cory, can you introduce yourself and tell us a little bit about you?
Yeah, hey Chris, thanks for having me on. We're an RIA here in Cincinnati, Ohio. I've got myself and six additional staff, three other advisors with me. I started the firm just solo practitioner in 2013 and was prior to that with a couple other firms, even back to my high school days of doing some financial internships. And yeah, we're closing in, at somewhere 250, 260 million in AUM. And uh, the vast majority of that has been my book of business that I've grown. And now I'm kind of moving into the CEO type role and trying to pass off some of those clients and part of that book to my other advisors. Uh, and then personally, I'm born in Cincinnati, grew up in Huntington, West Virginia. Came back, big Bearcat. Went to school at UC. Got a wife who's also a Bearcat, my wife Emily, and we've got a 3-year-old little boy.
Oh, wow.
Yeah,
Congrats, man. That's
yeah.
it's amazing. Awesome. Well, a lot to unpack and dig into there. Can you start how you found yourself in this wild industry we both love so much?
Yeah. So I joke with people sometimes and say finance really kind of found me. It was just something, growing up, math was my favorite subject. I was always kind of a little entrepreneur as a kid, whether it was, selling my toys at the yard sale or in high school, my first job a was cutting grass, and just neighborhood cutting grass. And I loved it because you could set your own hours and, um, you know, uh, set your own price and work as hard or as little as you wanted. But one of our family friends was a stockbroker, and, I got to see some of their lifestyle over the years and how he was able to help his clients. And so I did a few internships with him during high school. Came to UC, and I studied finance and real estate there. And they've got a co-op program, which is a really great program where you end up graduating with basically you go to school for 5 years, but you graduate with roughly 2 years of work experience.
Hmm.
Um, so that was, a wonderful way for me to just see different parts of the industry. I tell everybody I actually thought I was going to be a college basketball coach. Was an equipment manager for the men's basketball team at UC, and had a great experience doing that for 5 years. But ultimately, was thankful I kept the finance tracks going as well, and ended up pursuing this industry.
Hmm. Awesome. Are
Yeah.
you a pretty tall person?
I am not. So I was this size in seventh grade and never grew again after that. So I'm about
Oh.
5'11", and after that, my after middle school, kind of my basketball playing days were over, and so, but it was just a great way to get some scholarship money in college,
Hmm.
and got to do a lot of great travel and have some quite a few good stories from it too.
Hmm. Hey, 5'11" is nothing to sneeze at, my man. That is well above average. My dad was 4'11" until he was 16 and a half.
Okay. All right. So yeah, yeah. Um,
So
yeah, what was interesting about that is I went from, playing center because I was like, the biggest kid to never growing again. So then I, needed to be a guard, and my ball handling skills were not, really developed from playing center for a few years
Hmm.
prior. So is
Yeah,
what
yeah,
it is. Yeah.
yeah. Well, the universe knew you were a master entrepreneur. Didn't want you to get confused what your best path was, right?
Yeah, that's right. That's right. I still have not given up on the dream in the sense there's a really great book called Fourth and Goal. I don't know. Have you heard of
Hmm.
it?
No.
Um, I won't spoil it, but it is about someone that ended up having a really successful financial career, was a football coach, ended up going into finance, having a really successful financial career, and then ended up going back and never giving up on his dream of being a college football coach. And
Cool.
late in life was an unpaid assistant at the age of like 60 or 62 at Nebraska. And then it's a pretty awesome story, so you should check it out.
Yeah. Nice. Nice.
Yeah.
I'm a big football fan, so any great stories in there, I'm in.
Yeah.
That's
You would enjoy this book then for sure.
Yeah, yeah, awesome. I'm also uh the Bengals are my second favorite team, so
There we go. Yeah.
yeah, yeah.
Yeah.
My college roommate was from Cincinnati, so I'm from Tampa. So the Bucks were always my favorite, and Cincy I always had a special place in my heart for.
Yeah. Yeah. The Bengals, man, it's a lifetime of heartbreak being their fans, but one of these days we'll break the curse.
You guys certainly have the talent, man. Joey B is
Yeah.
he's incredible, man. I love watching that guy. And
Yeah.
Jamar.
Yeah.
Yeah.
Yeah. Yeah. It's crazy that, yeah, some of the games they lose, you look at the stat lines, you're like, how did they lose this
You're
game?
like,
But
that's dude, didn't they have a stat line? It's like they're the first team in NFL history to hit certain accolades and then lose.
it would not surprise me.
That's brutal.
Yeah.
Brutal stat line, man. Brutal.
Yeah.
Yeah. Okay, awesome. Anyway, so yeah, you always had this entrepreneurial bent to you. 10 or 11 years in, you've reached a incredible level of success. You started the company yourself. How did you get traction when you first started?
Yeah. So that's a common question. And, realistically, I just started with the low hanging fruit of friends and family. We didn't have any account minimums. So at the time, I was 25 when I started the company, and I'd take on $5,000 Roth IRA clients, people I graduated and wanted to start building a long-term relationship with that I knew would eventually be high income earners and might have rollovers in the future, et cetera. So, at that time, a $5,000 Roth IRA for me, I didn't have wife, I didn't have a kid, I had a roommate. It was, hey, this is a $50 pay raise. And so, um, yeah, there were definitely some lean years there, but, um, a couple things that I remind people is one, this industry is an amazing industry where we have a natural tailwind built in, and that, historically speaking, we're going to get somewhere around that 10% annualized growth rate if you don't screw things up too bad. And so there's not many industries that have that type of compounding and growth rate just naturally. Um, and then the snowball effect, like similar to your assets compounding, your client base compounding, right? So if I have, one client and I'm serving them really well, and then all of a sudden I get a second client, well, now my potential network of referral sources has now, doubled, right? And then I get to four clients, and then now I doubled again. And so um it was it was really busy there in the beginning, getting some low hanging fruit, and then there was definitely a lull. And I just kept my head down and just kept trying to service the crap out of my clients and be present and help them, with things that even uh, I, I maybe was not necessarily being compensated to help them with, but I wanted to go above and beyond, right? So, maybe it was an account that they had a question on that I wasn't even necessarily working on, an outside annuity, something, right? Hey, I'm going to sell my car. Any idea what I should sell my car for? So I just was trying to service the crap out of them, and then you know, from that you get a couple years into it and that referral snowball also starts. So you've got the compounding of the market, growing for you. Plus then you've got the compounding of doing a good job for clients and the fact that they will start referring, people they know and love and care about to you. And so now it feels like we're really starting to get momentum with that snowball rolling down the hill.
Hmm. Wow. Okay. So just really leveraging your Rolodex and just compounding interest and referrals was the magic formula. Sounds like.
Yeah, and I'll throw a third one in there that I've been talking to my team about recently, which is um, I was used to a very fast-paced environment during college. I was pretty involved on campus. Doing the equipment manager thing kept me certainly very busy. So when I got out of school, I was immediately kind of looking for what am I going to get involved with and do. And so joined a couple nonprofit volunteer boards, ended up working with UC on some of their boards. And what that allowed me to do is also get in front of people and allow them to see me how I work, how I um, you know, am I a man of my word? Do I treat people with respect? Right. They got to see me in an environment where I wasn't going in there and just saying like, "Hey, I'm a financial advisor, let me help you with your financial plan." I was just a human being trying to do, help people out and get involved.
Hmm.
And, a lot of our clients then, whether it's a few months later or a few years later, ended up being either maybe people that I volunteered with or people that I volunteered with that ended up referring me to somebody else just because
Hmm.
they were able to see me being involved and see the type of work that I was doing.
Hmm. Yeah, that's great. You share that aspect. That's definitely been a common theme of our more, you know, really successful guests. They seem to like have another great passion in their life that they're still very involved in, that they kind of meet a lot of friends and future clients through that secondary obsession.
Yeah, yeah,
Yeah.
yeah,
So.
yeah. And I'll share too, like, where I felt like our growth really started to explode is, um, getting in the industry and getting the business started, but you're typically not going to grow, sitting in an office, right? And so, early
Mhm.
on, I spent a lot of time diving into research reports and earnings reports and what are some different, market or equity strategies. And I started taking a couple classes and getting some accreditations, but, you know, when I started to really see the business start to grow was when I was just getting in front of more and more people, right? Getting them in
Mhm.
for a quarterly call or a semi-annual progress meeting, um, uncovering assets that you didn't know about because you're sitting there and trying to put together a comprehensive financial plan, taking people out to lunch, or happy hour. Just getting in front of people is it's not rocket science, but it tends to lead to some form of growth.
Yeah, yeah. And it's organic too, because you're meeting because that's just part of, whatever you're involved in. So it just comes up organically. They're like, "Oh, what do you do?" You're like, "Oh, I'm a financial advisor." Like, "Oh, I need one of those."
Yeah, yeah,
Yeah.
yeah, yeah. And it helps
Yeah.
too when people start having, life events, right? So career change, marriage, having kids, unfortunately, right? Parents passing away, receiving
Hmm.
some form of inheritance, right? So that's how a lot of clients end up coming to us as they're having some type of life change, and they've either been working with an advisor and not happy with the work that they've been getting, or they've never worked with an advisor and they're having this life change. And so it's, you know, the incentive for them to finally come meet with somebody.
Yeah. Awesome. Awesome. So you seem to have kind of a preternatural understanding of business and sales and probably even marketing. Um, like, did you have a mentor of some sort? Like how did you know to start an RIA? How did you not end up in a big wirehouse to learn everything? Like, you're 25 starting this. Like, that's it's a pretty bold move there.
Yeah. So, again, I had that first internship in high school, with a regional broker dealer. And, at that time I didn't know the difference between a broker dealer and an RIA.
Hmm.
Um, my first kind of boss, right? He was more of your typical stockbroker model. Um, Going to school. I was in school during the financial crisis, so not the best time to be trying to find financial internship job
Oh yeah.
opportunities.
I
Um,
graduated in 2008.
yeah, yeah. So
Yeah.
I always tell clients though it's a really wonderful time to be in school when you were studying finance, because every day there's something new to be talking about with your professors. Um, so, I had this co-op experience with a firm here in town called Johnson Investment Counsel. Johnson is a wonderful firm, and they're an RIA. So, I was doing a 6 months in school and then a 6 month co-op rotation. I was in school during basketball season to be an equipment manager, and I truly learned so much at Johnson from a fundamental just analysis standpoint and how they treated their clients. I had some wonderful bosses there, and I just tried to be a sponge. I really tried to be a sponge and ask good questions. Um, and at something just, I felt like after I was there for 3 years, I had started to hit a little bit of a ceiling, or just kind of felt stagnant a little bit. And I couldn't figure out what this urge was. And I never knew I wanted to be an entrepreneur. But ultimately that's what was calling me. And so I went to another small firm prior to starting my own, but that's when I started building my own book of business. And um, I I was able to make that leap because you just touched on it. Again, if I had a wife and kids and, parochial school to pay for and all the adulting responsibilities, it would have been a heck of a lot harder, not impossible, but a heck of a lot harder to have taken that leap of faith. Um, I was 25. I had a little bit of money saved up. I had a couple rental properties that were cash flowing. Um, so I said, "Hey, I can live pretty lean here for a few years and give this a shot and see if it's going to work." So, thankfully, so far so good.
Wow. Okay. Man, that's impressive.
Yeah, yeah,
25 with money saved and rental properties. Man, you are you are well ahead of the curve. I was still in grad school at 25.
yeah, yeah. Um, I mean,
Yeah.
I was fortunate, bought a rental property in college and lived there, and so had roommates that were paying the rent, um, and then that allowed me to save up money to be able to buy the next property after school and start that.
Hmm.
But I'm out of the I'm out of the college rental property game now.
Yeah. It's
Uh,
probably for the best. Yeah, I really I really feel you there. I'm sure the firms you were working with like saw your potential, and you were obviously a rainmaker, and they probably did everything they could to keep you. even like tried to scare the shit out of you. I had a similar experience. I was working for NASA in the finance office during my last years of business grad school, and they just did everything to try to keep me. And I just felt something inside. I was like, no, like I need to figure something else out here. Like there's more and more exciting and rewarding experiences out there. So
Yeah. Yeah.
yeah.
And there were some things I had figured out and there were a lot of things that I didn't. And just being a lifelong learner and trying to read and figure out there's a wonderful book called The E-Myth Revisited that I read that,
Mhm.
entrepreneur myth that was really kind of life-changing for me in a lot of ways. Um, but I also I think you can learn when you're in experiences, you can learn like what goes really well and what's working. And then you can say by, observing situations, you can say, if I was in this situation, maybe I would do this different because here's why I think this would be a better way. And I've learned that from every job or opportunity or boss that I've had was here were strengths that I think they did really well and I want to try and replicate. And then here are, some opportunities for growth that I think either companies or bosses had that, I thought to myself, if I was in that same situation, I'd handle it differently. And um, so there's opportunity for growth and learning, even if you're in a situation that doesn't feel like it's the right situation.
Hmm. Yeah, absolutely. Um, yeah, absolutely. Yeah, the book that I read that it sounds like it impacted me like E-Myth impacted you was the 4 Hour Work Week by
Yeah,
Tim Ferriss.
sure. Yeah, yeah,
Yeah, yeah. I literally read it on the van pool from Orlando to Kennedy Space Center, like about a year into my work there, and I was like, I'm gonna quit and start my own business.
yeah, yeah,
So
yeah. Like a lot of books, the theory makes a lot of sense. Uh, Executing on it is
oh
potentially
yeah.
a little bit harder, but
Yeah, yeah.
yeah.
They tend to make it a little easier than it is.
Yeah. Yeah. But
Yeah.
we have a lot of that in our industry too, There's a lot of financial theory, but we don't live in a theoretical world. We live in a messy, realistic world where emotions and fear and greed and,
Hmm.
a lot of things that you just can't model out so linear and black and white like I think a lot of people hope or wish you could.
Yeah. Yeah. No, that's true. Uh, like Mike Tyson said, everybody has a plan until they get punched in the face.
Right. Yes.
I feel like
Amen.
no analogy better exemplifies the entrepreneur experience than Mikey T's.
Yeah.
Um, yeah, yeah, awesome. So you obviously did, the vast majority of things correct. To find yourself in such a state of success. You have 3 junior advisors, it sounds like. Is there anything you would have done different on your path? Obviously, hindsight is 2020.
Yeah. Yeah. Absolutely. There's a couple things I would have done differently. And it's easy to say from this position, like you touched on. I certainly would have wish I would have found that light bulb moment of stop spending so much time trying to eke out, an extra, few basis points of return or whatever it is by, I was reading a couple morning research reports and afternoon research reports and earnings season. I was, looking at option trading strategies and, I was really into the X's and O's of the investing world. And I think it's made me a much better advisor now because I have that granular of knowledge. But Again, you don't meet people when you're sitting there spending 2 or 3 hours a day, reading research reports. Um, and so I wish I would have had that light bulb moment of really focusing on the financial plan side of it more than just the investment piece. Because when again the business really started to grow was I remember this very specifically a client coming in and having a progress meeting and I was so excited to be able to show them their performance and how well we had been doing and you know, they just, hey, that's great, thanks. It didn't land the way that I thought it was going to. And then as the meeting progresses, I find out like, hey, they're really stressed out about some of this credit card debt that they're carrying, and there's some other things. So they weren't in the frame of mind to even think about what their investment returns were doing because they had these other parts of their financial plan that were leaking oil. And
Hmm.
so, being able to sit there, walk through that plan, help them come up with a way that was going to get them out of the credit card debt in the next 12 to 18 months. Um, and it was just kind of a light bulb moment of, yeah, I just need to be meeting with more people and actually going over the full comprehensive financial
Hmm.
plan with them,
Hmm.
using e-money to more of its potential versus, having an hour meeting, sitting there talking about what their investments have done, what individual stocks or funds we were invested in, why, market outlooks, etc. That 99% of people don't fully understand, even if they're nodding and acting like they are. Um, so, and I think our industry is ripe for opportunity in that this job is, 80 to 90% psychology, I think, and 10 to 20%
Hmm.
actually the blocking and tackling of the finances.
Yeah. Yeah, we've had a surprising amount of guests who were teachers and or went to school for psychology
Yeah.
who are now
Yeah.
advisors.
Yeah. Absolutely.
Yeah.
Um,
So,
it, it is, it is such a much bigger piece of this industry and hopefully universities and programs will continue to focus more on the behavior counseling side of the financial planning versus um, just the uh, finance, you know, in the weeds. I mean, I joke with people. I'm like, I took a bond valuation course, in three, four, five, six different ways of how to value a bond, and I I've never used that once. Nobody's ever going to sit there and hand calculate the bond valuations. It's you got computers to do that for you. So, things like that. It's like that time so much would have been better spent um, trying to learn how people think, why they think, why we have some of the biases that we have when we think about money. Um,
hmm.
yeah,
Yeah. Yeah, that sounds like that would be a lot more valuable for the client and for just being able to best serve them, read between the lines of what they're saying.
yeah,
Yeah, yeah. Awesome.
yeah,
Awesome. So I mean you shared a couple of these already, but it sounds like the the trick to getting more clients is meeting more people, and the trick to meeting more people is finding more interesting places to meet people. If it aligns with your other passions in life. Like we have a client, he built his book of business on the Boy Scouts of America. He's an Eagle Scout. His sons are Eagle Scouts. He sits
sure.
on the board of Boy Scouts of America. Are there any, for any of our advisor listeners tuning in right now, is there anything that you would recommend that an advisor do to just get more at bats, meet more people organically? Anything in that realm.
Yeah, yeah. And you touched on something because in your last question, one of the things that I would have done differently as well that plays into this is um, Nick Murray uses the analogy of an arc, right? There's only so much space on your arc, and don't let any crazies on your arc. And I think we all can have clients that at the time, maybe you're bringing them on board, and uh, it doesn't feel like it's a good fit. Maybe you're not the right advisor for them, right? Maybe they have
Hmm.
a complicated situation that just isn't your expertise. Um, Maybe they are forever going to be scared of market volatility, and you're never going to be able to teach and educate them on why there's other parts of risk. So, um, uh, I think I should have trusted the process more to say no to some clients early on, because had I spent more time doing some of the things, target marketing, you know, being a little more uh, open in the public on volunteer boards, etc., I would have continued to meet more people, right? And especially when you consider spending a lot of time potentially with a client that's not a fruitful relationship because it's just not a good personality fit. It's distraction, it's energy, it's time away from potentially servicing your other clients really, really well, um, versus just kind of cutting bait and saying this isn't worth this right now,
Hmm.
and trusting that there's going to be more opportunities in the future. So
Hmm.
um, I love the analogy that our industry, I think there are certain advisors that don't realize this industry is very much like golf. It's you playing against a course. It's not you against playing against other people. And advisors can be very protective over their book of business and look at other advisors as their competition. And it's like, guys, there are way more people in this world and in this country that need sound financial planning help than there are qualified advisors to help them. So what we should be doing is figuring out ways of how can we make the general public more financially literate? How can we get out there to get our youth more financially literate early on? Because typically that's where they're learning a lot of their financial principles are at home. And we're not taught this stuff, right? We're not taught in grade school or high school or college. The majority of us have never been exposed to a personal finance course. And there's not many other areas of life where if you've never had formal training on it, you're just forced to do it, right? Everybody has to deal with finance in some way, shape, or form. But the vast majority of the things that we do on a day-to-day life, right? So at some point you've had some form of training on it. Um,
Hmm.
so
Yeah, yeah, absolutely. And I think that's such a valuable entrepreneurial lesson, because when you start, you're like, I'm close to starving. Anyone with a pulse and like $10 in their bank account, like let's go.
yeah,
But what you realize is that while you're trying to reel in that, minnow, like whales are swimming behind you and underneath you and on top of you, and you're not using that. You only have so much time. You're not using that time to find the whales. So yeah, that's a great point. Thanks for sharing that. Um,
yeah,
so I want to discuss like bringing on junior advisors. So
sure.
you said you have three, correct?
Yeah, so they're technically full advisors
Or full
now.
advisors, sorry. Yeah, yeah.
No, it's all right. But they have two of my advisors have been with me for a little over 3 years. One has been roughly 18 to 20 months. Um, more or less all of them are career changers. But there is they all had the interpersonality and the soft skills. They were all working, either had passed their CFP or were working on it. And so being able to bring them in, um, give them some clients early on that I knew they could handle, right? Not super overly complicated financial plans. Looking for personality fits for all of them. And so now the hope is with the firm continuing to grow is we actually will then bring on that next true junior advisor that will be able to help, for 3, 4, 5 years as they truly grow into a full advisor role. So
Hmm.
uh, yeah, that's my favorite part of it. One of my strengths and strength finders is being futuristic and being a developer. And what
Mm.
excites me the most is thinking about where the firm can be in 3, 5, 7 years as you have now a third form of compounding and snowballing effect, right? So you've got market compounding growth, you've got servicing clients, so organic client referral growth, and then you have compounding effect of how do you keep adding qualified staff and advisors to be able to service more clients. And so that's
Hmm.
where it
Yeah,
truly feels like we got that snowball at the top of the hill and we're getting ready to start rolling down it.
man, you're like a reincarnated, like amazing financial advisor. You just inherently understand this stuff. That's amazing. So at what point in the trajectory of your growth were you like it's time to bring on new advisors, and how did you find them?
Um, Great question. So I took a course in 2015 called Effective Personal Productivity, and it's through a group called Leadership Management International, which is a mouthful, but it truly was again one of those light bulb moment, aha. And between that and E-Myth Revisited, originally I thought when I was a one-man band, my first hire needed to be I need to go find another advisor that wants to partner with me and that will be revenue producing, right? And I had that mindset for a long time. And um, by going through these courses and E-Myth, really what it talked about is, well, that doesn't make a whole lot of sense because if you bring on another advisor and making up a number, if that person wants to make, $100 an hour, there's still going to be tasks that need to be completed in your firm that, you could pay somebody 20 or $25 an hour to do. And so really what you need to do is start hiring at the bottom of your organizational chart and working your way up. And so I needed to get the systems in place. I needed to have a strong assistant, a working CRM. Like I I started working on those processes first before I was then able to bring on, my first advisors. And so I did try a couple of junior advisors, and unfortunately, they didn't work out. Part of that was it was right in the middle of COVID, and it just was
Mm.
not a great time for somebody to try and come into business and start meeting people when nobody was out to be met. Um,
Right.
and so, Blake, Michael, and Ryan, who are with us now, um, again, are kind of we're a little bit further along in their career and we're career changers. And um, that just worked. It just worked for what we needed.
Hmm. Awesome. Awesome.
Yeah.
Um, Great. Well, we are coming towards the end of our time. Cory, this
Yeah.
was freaking awesome, man. I could just keep riffing with you for the rest of the afternoon, but I will respect your time. My final question is an open-ended question. You can take it in any direction that you like. And that question is, what are you working towards? And are you working towards coaching basketball on the college level or the pro level?
Um, I think what I'm probably working towards is coaching my son's buddy basketball league, someday is probably where I'll tap out. But I am super excited about the trajectory of our company and the team that we have and the investments that we've made in the company. Um, it feels like we've got our workflows and we're much more systematic and much more scalable. Because ultimately, and this is from the E-Myth, right, is for a long time I've just owned a job. I haven't actually owned a company, right? Because if
Hmm.
I'm not
Hmm.
here, a lot of work isn't going to get done. And the goal is to eventually be able to service our clients, but my goal is to actually own a company and a business.
Hmm.
And when I'm not here, the machine's still running. And so it feels good to know that uh, there's light at the end of the tunnel.
Hmm. That's awesome, man. Well, it sounds like you are well on your way to living that reality. So thank you so much for taking your time and sharing your wealth of experience, even at such a young age. I'm older than you are, Cory. You've just reached an incredible level of success in a very short amount of time. I think the only person your age or younger who's reached this level of success, I was like, how'd you do it? And she's like, oh, we bought two firms. So yeah, kudos to you, man. That's really an exceptional job here. We've interviewed close to 100 advisors, so
Appreciate
you're
that.
you're doing something right, Cory.
Yeah, I appreciate that. Yeah, again, not a whole lot of secret sauce other than a lot of long hours and some breaks, some gifts from the man upstairs. So
Yeah.
but it's been good, and I really appreciate you having me on today.
Yeah, appreciate you coming. Where can my audience find out more about you and everything you're doing?
Yeah, so our homepage has been revamped recently, so simsinvestment.com. We do have a little bit of a LinkedIn presence. And so that too has also been revamped. I'm not a I can have a couple good marketing ideas, but I am not a marketer. And so it's nice to have some team members now that are taking the website and the marketing and social media and taking that to a new level for us now too. So um, those would be the two best places.
Cool. And we will link to all those in the show notes. Cory, thank you again for taking the time. This was an absolute pleasure. To all our listeners out there, thank you so much for tuning in and keep on growing out there, everybody. See ya.